And India's trade deficit widened slightly in the December quarter but remained under control.
A strong export pivot towards Asia and Africa is helping offset tariff pressures, and a weaker rupee is, of course, also helping the case. Now, the country's trade deficit in December edged up to $25 billion from $24.5 billion in November. Despite the marginal widening, the gap remains significantly lower than the record high of $42 billion, which was seen in October. A sharp correction in gold imports since October and a slight improvement in exports have been key factors behind this improvement. The oil trade balance also continues to improve.
Now, one key takeaway from the data is that export growth has begun to normalize despite the steep 50% tariff on exports to the United States. The shipments to the U.S. contracted 1.8% to $6.89 billion in December. However, the total exports to the U.S. stood at $65.87 billion during April-December, a 9.7% growth.
Now, recent trends point to strong diversification efforts. With notable gains in exports to Africa and North Asia, China is emerging as a more significant export destination for India. Historically, India has maintained a substantial trade deficit with China. However, recent data indicates a positive shift. With exports to China rising by around 20% year-on-year in 2025, the country's total export share to China remains quite modest at 4% as compared to United States' dominant 20%. Still, the latest development marks an encouraging step towards reducing India's reliance on Western markets.
Now, further signs of Asia-centric diversification are evident in the growth of exports to Taiwan, which increased by 10%. While Taiwan is not yet a major export partner, the uptick suggests deeper integration of India's technology supply chains within Asia. That reinforces the country's strategic pivot towards regional trade partnerships.
Well, in products, electronics has emerged as the standout performer in India's export basket. Electronics shipment grew by 40% year-on-year in 2025 until November, outpacing other sectors by a wide margin. Now, a key catalyst behind this surge is the smartphone-focused production, which is linked incentive scheme. The plan has attracted global giants like Apple and Samsung alongside domestic players. Well, these companies are using the incentives to ramp up production and ship more devices overseas. Apple, for instance, has turned India into its second iPhone hub after China.
On the flip side, petroleum exports aren't looking as bright. They are down 15% year-on-year in 2025 until November. The advantage Indian refiners had from cheap Russian crude is fading fast due to U.S. sanctions. Even when that discount was in play, exports were already sliding. Now that the cost edge is gone, the decline could accelerate.